Bismillah ar-Rahman ar-Rahim. Assalamu alaikum everyone. And now this time a practice question, AFM practice exam question 1. And this is basically AFM practice exam 1 question. It's the September 2018 exam question. Exam paper, complete exam paper. Section A, section B, all. So this particular session is about to work out with a 50 marks question with the name Washi Company. The important thing is that this question it's actually the integration of more than one syllabus area. It's actually the integration of more than one syllabus area. Integration of more than one syllabus area. That includes the foreign investment appraisal and also about forex risk management and something about the role of treasury management as well. Treasury function. The discussion about treasury function, that's it. Should it be centralized or decentralized? So now, exam standard question, exam caliber question, that's very much important. So let's start this question by reading the requirement. Now start. The first thing is to read the requirement. Okay, number 1. Discuss how investing in overseas project may enable washing company to gain competitive advantage over competitors who only invest domestic project. So this is a 5 marks generic question. Assess your intellectual capability. A company who only work out in the domestic project, compare with a company having domestic presence as well as international, with a definitely the competitive edge based on the market reputation and a lot of things. That's about the 5 marks we have to discuss accordingly. So first of all, we have to think at that part what should be the answer, the points with respect to the 5 marks. What to write and how much to write, that's important. Number 2, advantage and drawbacks of exchange traded options compared with over the counter. Option contract, OTC versus traded. Number 3, report to the board of directors. Report to the board of directors. Report to the board of directors. Come on. Estimate the expected amount of JPY, Japanese yen, receivable under the hedging choice. And this and is very much important. Huh? And the additional debt finance needed to fund Air 1 project for the preferred hedge. That's important. So something about the case, how much amount to receive by the hedging method and additional debts, something about this is 12 marks. Okay. Estimate the NPV of the Air 1 project in Japanese yen. Based on the end of Air 1 being the start of project at Air 0. Okay. Here this is assumption. That's end of Air 1, assuming Air 0. So if examiner says something, assume, that's we cannot say. We have to take the assumption. Otherwise, end of the Air 1, it's not Air 0. Okay. That's Air 1. Evaluate the preferred hedge choice. Okay, this is evaluate. What are the evaluations? Preferred hedge choice, Number one, debt finance needed. Number two, and whether Air 1 project should be undertaken. So if examiner asks or examiner split evaluate in three parts, we have to write the answer with three parts. Make a heading. Considering both financial and non-financial factors. If examiner mention financing, non-financing, then we have to put financing and non-financing both. Then professional marks will be awarded in part C of the format structure presentation 4 marks. And something discuss the validity of COO's suggestions, 7 marks. So there are 4 parts of the question, A, B, and D. It's pure theory. That's 5, 5, 7. 17 marks theory. It's other than report, the theory. Other than report, 17 marks. The report part, that is 33. And out of 33, one C1, C2 is calculation, and rest of the other part is theory. Can you please find out that how much part is calculation and how much is theory? Okay, discuss the validity of COO suggestions. Okay, finally. So can you please share me how much part of the question is calculation and how much is theory? What's your answer? How much calculation, how much theory? Twelve plus 9, 21 is calculation, and rest of the complete part, that's rest of the complete part means 39 marks. 39 marks calculation theory. Sorry, 31 marks theory. 12 and 9, part C, part 1, part 2. No. Accept the reality. Accept the reality. Not the 50-50%. Out of 50 marks, 12 plus 9, 21 marks. That is 42% calculation, 58% theory. If your calculation about theory and calculation is accurate, then you will perform it accordingly. It's not about halfway. I must say 40% calculation, 60% theory. That's the point. Okay, now read the question. Come on. First of all, make a quick review about that. Following exhibits available left side of the screen provide relevant to the question. Washi Company, introduction to the company and the proposed overseas investment project. Proposed funding and financial information. Air 1 project. Notes and further information relating to the Air 1 project. Then Chief Operations Officer suggestion. Further now start. Washi Company. Washi Company is a large unlisted company based in Japan. Local currency is the Japanese yen, manufactures industrial equipment and parts. Industrial equipment. Initially, Washi Company customers consist of other Japanese companies, but over last years it expanded into overseas markets. Also sources of material from around the world. The company's board of directors believes that strategy of the overseas investment through subsidiary companies branches, joint venture, directly led by the company's substantial increase in value in the past few years. So based on board of director believes that presence with international market actually enhances the value of the business. Okay. Washi company board of director considering investing in the project considering investing in the project Air One. Okay, Air One, whose currency is Air One Red, ARD. We will refer the term ARD. It believes that project will be an important addition to the company portfolio of the investment because Washi company does not currently have significant presence in the part of the world where Air One is located. It is intended that project will commence 1 year time. Project will commence 1 year time, but requirement says that although the project will commence after 1 year, but you will consider after 1 year as Air 0. Details of the projects are given in Exhibit 3 and 4. Washi company intends to finance the project through the proceed from agreed sale. Finance. One side of the question, same with the previous question. One side of the question of the investment, other side that is finance. Finance of the project through proceed from agreed sale of a small European subsidiary. Okay. With the remaining fund, with any remaining fund requirement being met by additional debt finance issued in Japanese yen. So what should be the mindset? If we are going to work out for the Air One project, the first thing from where we will collect the finance. We will arrange the finance by selling our subsidiary, international subsidiary. We are in Japan. We will sell the subsidiary in Europe. Whatever the remaining fund, remaining finance, the difference will be arranged from the locally debt finance in the Japan. The company is due to receive the proceed from sale of European subsidiary company in 6 months' time. Okay. And it will invest these funds short-dated Japanese treasury bills for a further 6 months before they are needed for the project. Okay. Actually, we need the finance after 1 year, but we will selling of the subsidiary and expected the finance will collect by next 6 months. We have a plan once we receive the finance from the sale of subsidiary, whatever the amount that will mention with the next slide, we will invest these funds short-dated treasury T-bills, Japanese T-bills, for the further 6 months before they are needed for the project. Washi company has a centralized treasury department, which hedges expected future cash flows against currency fluctuations. Okay. That is the brief introduction of the complete case. A very good case. It's a very structured, very comprehensive. That's important. Now, another point. Funding letter. Yes, the agreed proceed from the sale of European subsidiary company receivable in 6 months' time are euro 80 million. We will receive 6 months' time euro 80 million. The board of directors concerned about a negative fluctuations into euro over Japanese yen. Here the case about the receipts, about a negative fluctuation rate between now and 6 months when the euro 80 million will be received. Definitely here the case about the receipt. So we have a concern point that after 6 months, if we receive the euro, so we have a risk about decrease in the value of foreign currency or increase in the value of local currency, that is Japanese yen. Therefore, it has asked washing company treasury department hedge against the received one of the currency forward, futures, or traded currency options. That is the point. Washing company treasury department has obtained the following information. The informations: Japanese yen per euro and ARD per euro. Do you remember that? How to determine the codes are direct or indirect? How to determine the codes are direct or indirect? Very simple. Codes. The first thing, if base means denominator, foreign currency, that means direct code, and vice versa. Base is local currency, that's called indirect code. Always read the code reverse side. Reverse side means always read the code with bank point of view. With bank point of view. That's important. And one important thing, conversion. Direct code, the conversion required multiply. And vice versa. And very important thing, always read the code with viewpoint of bank. And remember only one thing, direct code, lower rate, buying. Direct code, lower rate buying with bank point of view or exchanger point of view. That's all. Can anyone reply here? What is the about code here? Is this the direct code, indirect code? Bisma, what you are trying to say that one thing, opt one thing, either direct or indirect. The code is direct code, huh? The code is direct because here euro local currency is Japanese and foreign currency is euro. Euro is denominator, that's called direct code. That's simple. Okay, another point. First thing is Japanese over euro. Number two, ARD over euro. There are two different things here. Number one, hedging, and then use the hedge fund plus some borrowing amount for the purpose of the investment. Okay, so the case about here, 6 months forward, here the forward rate, then futures. Whenever you are working with the forward futures options, some things you need to identify first. Code are direct, indirect. Very important thing. Code are direct, indirect. First thing. Number two, contract is denominated with whom? Contract here denominated with foreign currency. With foreign currency, no issue at all. Very simple. So contract here 125,000. Number three, currency. Currency contract also with 125,000. And also determine the premium. The premium the premium or the option. Here the exercise price of JPY 126 per euro. And here mentioned that premium quotation JPY per euro. So here in Japan, premium are also quoted with Japanese yen, with the local currency. With the majority of your question, premium quote with the dollars. And if the dollar is not your local currency, we have to buy the dollars from the local market. But here, very simple calculation. The premium we need to pay here with the local currency, the Japanese yen. That is the point. Furthermore, annualized yield on short-dated Japanese T-bills. So annualized short-dated Japanese T-bills, that's risk-free rate, simple. Air One's annual inflation rate 9%. Annual inflation rate 9%. Fluctuated markedly in the last 5 months. The Japanese annual inflation rate 1.5%. Annual inflation rates, and has been stable for the many years. Air One inflation rates 9%. Day2 Bank has offered Washi company the possibility to use over-the-counter options to hedge euro receive instead of exchange traded currency options. Okay. This is what about the funding method. Further information, that window 2 that was about. Window 2 that was about the hedging matters. Now the case connected. Related to the investment. A member of Washi Company finance team has produced the following estimates of the Air One project, which is expected for last 4 years. The estimates are based on the notes given in Exhibit 4, but not on the further information. The estimates have been checked. The estimates have been checked and verified independently of the numerical accuracy. If examiner mentioned that we have already checked and accurate, no need to work out further and no need to work out drill down. No need to work out. So sales revenue, cost, tax allowable depreciation, pre-tax tax allowable depreciation, that is ARD million. That is foreign investment, and foreign investment, the foreign based cash flows already given. All these things, investments. Important point is that the investment we required in ARD, it's 10.1050 million. That is a point. And the only thing in this question, it's that. That's all. Notes and further information. Come on. Notes incorporate into the estimates in Exhibit 3. That means Air One project information. The estimates are based on using the end of first year when the project commences start at the project Air Zero. Okay, we will assume the Air Zero. The numbers are given in ARD millions. Okay. The total investment required for the project is 10,1050 and separated into building machinery working in the table above. Okay, let's check. 10,150, 4, 5.7, 400. Okay, the machinery is eligible for tax allowable depreciation, straight line basis, working capital redeemable at that project. Okay. The impact of inflation incorporated in the sales revenue and cost figures. Current inflation figures incorporated. Okay. Corporate tax has been included. based on year one's annual rate of 15%. Tax is payable in the year tax liability arises. So all the things already incorporated, the tax matter, all these. So one area of international investment already covered. That is foreign investment cash flows. We just take the cash flows, all these cash flows, assuming all these are right, because examiner mentioned here, all things are right. And then convert and move on with the further cash flows. That's locally. Further information not incorporated in estimates in exhibit 3. That's we need to incorporate. Undertaking the Air 1 project will result lost in sales of the washing company. That's the opportunity cost. These sales would have been generated as a pre-tax contribution of JPY in the first year of the project. Rising by Japanese rate of inflation following 2 years. Once again, the sales would have to be generated pre-tax contribution 110 million in the first year and rising by Japanese rate inflation year 2 to 4. That is what about something about contribution matters. Loss contributions, opportunity cost. Air 1 project costs include component. Project costs include component which are made in Japan by washing company and would imported to Air 1 company. Is this relevant? The pre-inflation revenue generated from sales of estimated are as follows. Okay. Components made in Japan. These are the matters. Revenue. The revenue is expected to increase by Japanese inflation in year 2 to year 4. The contribution with the washing company expect to earn contribution 25%. The Japanese annual corporation tax rate 30%. Tax payable in the year and tax liability arises. Bilateral tax treaty between the Japan and Air 1, which permits offsets overseas tax against any Japanese tax liabilities. So here Japan, the tax rate 30%. And what about the ARD? The corporate tax rate, that was 15%. So can you please apply me? Should we pay more at Japan? Yes or no? Can you please apply me? Yes. Bilateral tax treaty means after bilateral tax treaty, we have to pay extra 15%. Washing company finance department estimated that the cost of capital to be discount for the project. One thing that should be very much clear here, international investment will be made by NPV, not the APV. Okay, come on. Then chief operating finance, what they say is washing company chief operating officer suggested that it would be more beneficial for the company to let its major subsidiary companies have their own individual treasury department instead of having centralized treasury department for the company as a whole. That is the point. So this is what about the comprehensive reading of the question. Once again, after reading the question, you have to read the requirement. Once again, discuss how investing in overseas project may washing company gain competitive advantage. Discuss advantage and the drawback of the trade option with over the counter. 5 marks, 5 marks. And the D part, the suggestion about the central decentralization of the central treasury department. Rest of the point about the report. Prepare a report of the board of director. The expected amount of the JPY receivable under the hedge. So first of all, make a plan. If we are going to make estimate the receivable under the hedge, so there are 3 hedging options. We have to work out with the 3 hedging options and then identify from where we will get higher amount or lower amount. Higher amount or the lower amount. Yes, from where, how much amount we will get, a higher amount we will get from one of the 3 options. Number 2, we required the total finance of 10,150 ARD. That should be converted in the euro. Oh, sorry, Japanese yen. The point is that some of the funds we can arrange by this 80 million euro. Means first we will work out how this 80 million will be the best by 3 hedging options in terms of Japanese yen. Then we have to compare with these Japanese yens with the cash flow required with ARD 10,150, but this also need to be converted with Japanese yen. If there is a difference, then we have to move for the debt finance. That is a requirement. The additional debt finance needed to fund AR1 project for the preferred hedge. Second, estimate the NPV of the AR1 project. Estimate the NPV of the AR1 project based on AR1 at the starting point. Okay, this is international investment appraisal. And third one is the report writing. Evaluate with the discussion of preferred hedge choice, debt finance needed, and the whether AR1 should be undertaken or not with finance, non-finance. Finance means NPV, positive or negative. Non-finance means like political factors, like competitively, strategically embeddedness, strategic fit, the other factors. So this is what about the question. Candidates, even you people are watching the video, can you please share me what is your feeling about that particular question? Is this hard? Is this easy, or the balance? Even you watching the video first have to develop your mindset. Do remember the very important point. Whenever you open the question, whenever you are working with a question, mark my word, always motivate your mind that even the question is hard, mild, or easy. We have to make a plan. We have to make a plan. We have to make a plan. How we are able to attempt the question, to attempt the 100% question, complete question appropriately. That's another point, very important point I'm going to discuss with you. The very important point is that we have a mindset to attempt the question with 100% appropriateness, not the 100% accuracy. Whatever we will attempt with this report writing spreadsheet, we have to attempt with 100% appropriateness, not the accuracy. Sir, what is the meaning of appropriateness? Appropriateness means if we are working with the question, and we are going to stuck somewhere, we will not stop. We have to keep moving, keep moving. Even take assumption and keep moving. That's a key point. And number two, the very important thing is to practice. That's called exam simulation, the questions. It's the nature, it's a God gift that every human being wants to move and learn the things. We even not able since the birth how to walk. But even though at the initial stage, we initially crawling, then then move on accordingly and get some accidental damages with different part of the body, and then now become able to run. So this is what about the nature. Take the risk and keep moving. That's an important point. Number one, take 10 to 15 minutes break, refresh your mind. Then we will work out for the question accordingly. The target is that how we will appropriate solve this question complete rather than accurately. With this question, we will learn the term appropriateness, not the accuracy. That's a point. Okay. Take a 15 minutes break for this question. Then we will meet after that. 15 minutes break. Okay, ji, Bismillah Rahman Rahim. Assalamu alaikum once again. Now we are going to start the session up. We are going to attempt that question. So the part C and the appendix. The appendix, the number one, the hedging strategies under which we will evaluate from which hedging strategy we will be able to get the maximum amount for euro 80 million. So let's start. Our target is to prepare a report, but before the report, we have to work out accordingly. We have to work out for all the supportive working. That means some of the part of the question will perform, that is C1 and C2. And this is what about the appendix. Come on. So let's start. Okay. Number one, appendix 1. And that is about hedging strategies. I hope that all the things are clear. My voice, screen visualization, my picture as well. Hedging strategy about euro 80 million in 6 months' time. Okay, now start. So we have forward contract. Number one, quickly, huh? We have future contracts. And we have traded options. Yes, we have traded options. Now come on. We have to identify the figures. Huh? Number one, the very first thing, the forward contract. Very simple. With the forward contract, amount expected to receive one liner, and all of the working must be at Japanese yen, JPY. JPY, Japanese yen. Okay, come on. Amount expected to receive. How to calculate? Euro 80 million. Direct code. Be with me. Can you please reply me what the rate I will take? Number one, that is the direct code because denominator is euro. Denominator is euro. That's simple. Denominator is euro. What the rate we will take? It's very simple. Direct code. We have to buy. Sorry, we have to sell. Bank will buy. Lower code is buying. That is 125.3. If you people have any problem, you can reply me accordingly. That's very simple. $80 multiplied by 125.3. Sir, is it necessary to mention the working? Not necessary. All the working, we will mention Japanese yen in millions. Is equal to 80 multiplied by 125.3. You just mentioned this amount. That's all. Is equal to this one. 10,024. Number one. Number two. Future contract. Future contracts one by one. Number one, which future contracts? The very important point. Which future contract? The amount will expected to receive. The amount will expected to receive in 6 months. And we have two future contracts. That is 4 months and 7 months. Can you please reply me which forward contract we have to work out? Very good. Number one, which contract? 7 months. Number one. And what is the type? What should be the type of contract? What should be the type of contract? The type of contract always based on this. Whatever we need to do in future, whatever we need to do after 6 months, do it now. What we should do after 6 months, we should do sell the foreign currency. Sell the foreign currency. And our contract is also based on foreign currency. So we will mention sell now, sell euro now, and buy euro later. And do remember, always with the market term, sell now means short position. Sell now means short position. This is the market terminology. This is the market terminology. You can either use word sell now, buy later, or you can use a short term, short position. Short position. If some of the case, buy now, sell later. So buy now means long position. You can use the word short position or long position. If you mention short position, examiner will pick. Okay, you have done it. Okay, how much the number of contracts? How much the number of contracts? Future contracts based on foreign currency, that is euro. Yes, is equal to our exposure is about 80 million euro. €80 million. So is equal to 80 divided by each contract size 125,000. 125,000, 0.125. Or you can work out 80 million, 80,000, 1,000 divided by 125,000. Same. $640 contracts. So you just mention here buy 640 euro futures with short position. With short position. Buy 640 euro 7 months contract with short position. Rather than to write all these things, you just quickly make one line. Because this one line equals to 1 mark. Equals to 1 mark. Now, come on. We are not just here to attempt the question. We are also here from where we can save the time. Are you getting the point? Now, Appendix 1. Amount to be received forward contract. This is 1 mark. Decision to go short on futures. 1 mark. So always consider that point. That's how it's possible to save our time. How can we save our time? That's the key point. Because whatever the time we will save, we will use for the theoretical aspect. That is the point. And we will also discuss the point, what is the meaning of appropriate solution? Mark my word. Mark my word. Not the 100% question is complicated. Not the 100% question is complicated. Examiner deliberately put some hard component with the question. Examiner deliberately incorporate some hard component in the question. But majority things are easy parts, like this. Whenever you face the hard component, what you should do? Remember your God, Allah, and put your best effort. That's all. And keep moving. Whenever you stuck at any point at a AFM paper, apply this rule. Remember your Allah, God, and do your best, whatever you think. Examiner will never fail you if you attempt wrong the hard part, but examiner will fail you if you attempt wrong the easy part by messing up the hard aspect. If you mess up with the hard and attempt the wrong thing with the easy part, then you will disqualify the exam. And that is the meaning of keep moving. Keep moving. Okay. Buy futures. Buy 640 euro futures 7 months contract with short position. Number one. And after that, the lock-in rate. And after that, the lock-in rate. After that, the lock-in rate. How to calculate the lock-in rate quickly? Future rate now. What is the future rate now? Come on. That is 125.2. And add basis risk remaining. Add basis risk remaining. Come on. Basis is remaining. What is about the basis is remaining? Come on. Deworking. Quickly. Spot. Futures. Now. What is the spot rate now? What is the spot rate now? We will sell, bank will buy. Direct quote, lower rate is buying. This one. 129.2. Very good. 129.2. Futures rate 125.2. So basis risk now is equal to 129.2 minus 125.2. That is 4. And we will exit at 6-month date. After 6 months. At that point, what will be the remaining basis risk? Basis risk remaining 4 divided by 7 months, remaining 1, that is 0.57. It's very simple. 0.57. So what is the lock-in rate is equal to sum 125.77. and amount expected to receive is equal to 80 multiplied by 125.77. 10,061. And if we work out with the one figure, sorry, okay, that is 10,061.6. That is the point. Now, the option contract. Now, the option contract. Option contract. Come on. Option contract. But refer the marking scheme. Estimate the future rates based on basis. 1 mark. Future rates means here we can say that lock-in rate. And amount expected to receive 1 mark. That is the point. Now, option contract. How much marks available for option contract? Total 3 marks available. 3 marks. Number 1, decision to purchase. What options? Put whatever. So, if option contract, sell now, buy later. So based on sell now, buy later or short position, sell now, that is called put option, or always with the short position, put options. Sell now, that is short position. Sell now means put option. That's all. Number of contracts, same. 640. What we will say here, to get 1 mark quickly, 640, we will buy by 640 euro, 7 months, put option. And you will get the 1 mark. Candidates, can you please reply me? Are you people with me? So number 2, the very important thing, another one, the premium. The premium payment. The premium payment upfront, and the premium here available with the JPY. With the JPY. What we will do here, the premium cost, number one, that is put option, this put option. That is put option. Number two, 7 months, and that's equals to 3.8. 3.8, 3.8 Japanese yen for each euro. So how much option contract we purchase in euro? We will mention that 640 contract, each contract euro 125,000. And we have to pay Japanese yen 3.8. And we have to work out with the million, is equal to 640 into 125,000 into 3.8 divided by million. That's equals to 304. That's equals to 304. So premium upfront payment we have to pay 304. 304. That's important. Now we have to evaluate if the option exercise. Option evaluation. The exercise price versus estimated spot. In this case, estimated spot is not given. Then we will use the forward option evaluation. The option is, it's given here. Japanese yen 126 per euro. Exercise price, Japanese yen per euro. If we move towards to exercise, number one, our local currency is Japanese yen and foreign currency we will receive euro. Once we collect the euro, we will sell the euro. And if we exercise against 1 euro, means if we sell 1 euro, we will get 126 Japanese yen. But what about the estimated spot? Means forward rate 125.3. Is this valuable? That's called intrinsic value. Do we have? Yes or no? By forward contract against euro, we are getting lesser Japanese yen, only 125.3. But by exercise, we are getting higher one. Once again, you have to read it very carefully. Whenever you are evaluating option, the very important thing you need to consider that which one is your foreign currency, which one is your local currency, number one. So here foreign currency is euro and local currency is Japanese yen, JPY. Number two, you are actually sell this foreign currency and receive the local currency. Now read it carefully. Now read it carefully. If we exercise and sell euro, so against denominator, against means denominator 1 euro. By exercise, we will receive 126 local currency, receive 126. But in the forward market, we will receive against 1 euro, 125.3. Do reply me. Is the exercise price valuable? Yes or no? Our exercise price, it's valuable. If you are watching the video, any problem, you can ask me on the WhatsApp. Yes, it's valuable. It's valuable. So important is saying if it's valuable, so we have to determine a very basic option. No need to work out any intrinsic, any gain or like this. Make a shortcut solution. Option exercise price, exercise value. Option exercise value includes the gain of option exercise. Means how much contracts? 80 multiplied by 120. Sorry. How much contracts? 640 contracts multiplied by 125,000 multiplied by 126 is equal to 640 contract into 125,000 into 126 divided by 1 million. 10,080. But your premium cost, that's called 9776. 9776. Amount, net amount expected to receive. $9,776. So now the conclusion is that, which one is the best option for the hedging? The future contract. We will mention here conclusion. Future contract give the highest receipt that's equals to 10,062. This one is the conclusion. Now marking scheme. We have done all these matters, and decision with the hedging instrument also having 1 mark. Decision having mentioning the decision also have 1 mark. So can you please reply me? Is that clear? All of you? But do remember that this amount we will receive by 6 months. Then we will invest this particular amount for further 6 months as an investment. And then the remaining part, if required, then we will borrow the amount for the investment for the Air 1 companies, whatever. So number one, appendix 1 is done. Now it's point for appendix 2. Appendix 2. What is about appendix 2? The additional debt finance. Now the question is over with respect to hedging. Now the another part. Out of 12 marks, we have done one first part, and the additional debt finance, that's a requirement to fund the Air 1 project for the prefer hedge. That's another point. Okay. Additional debt finance to fund the Air 1 project. Okay, come on. Now, first of all, this is a tricky part of the question. I know that. And what I personally think, this is the hard part of the question. But the very important thing, relax. Relax. And remember Allah. And plan your question, what they are asking. Actually, whatever we have to do, that is with respect to Japanese yen. Number one. The very important thing, whatever we need to do, that's with respect to the Japanese yen. Very first thing. First of all, finance required total finance required for the project. The total finance required. The total finance required is ARD 10,150. Air 1 project currency 10,150. That is ARD 10,150. But we don't know the value in terms of Japanese yen. Number one. First of all, have to develop approach what we should do. Even though you become wrong, it's become wrong. No worries about that. Do you know that what examiner says? One minute. AFM September 18 examiner report. 1 minute. Yes, this one. This is what about the examiner report now? Now come on. A very important thing. What examiner says about this requirement. Yes. Part C. Part C1. Yes. This paragraph is about this requirement. I'm not reading the requirement, but here a very important term use, the own figure rule. Examiner here use the term own figure rule. Do you know what? I will read the question after attempting. But what is the meaning of own figure rule? Own figure rule means if you are attempting some question, some part of the question, and you know that the marking scheme says that each step having different marks. For example, if you attempted one of the step and if it's become wrong, examiner, whatever you have performed wrong, whatever you have performed, whatever you have worked, whatever the efforts you have put, examiner will consider own figure, assume figure. Own figure means assume figure, and based on that figure, the examiner will check your remaining answer, even though the next part is connected with that particular things that you attempted wrong. And next steps, you will get complete marks. But the important point is that examiner says you have to put effort and show your working. If you have to put effort and show your working, even it's become hard, even it's become wrong, we will just cut your limited marks, and for the rest of the portion of the question, we will provide you 100% mark. But what you people do during examination, if something difficult, you become mess, and then on that basis of the mess, you attempted the wrong. You attempted the wrong one with the easy one part. No, if you are sitting at the examination hall, if you feel that something is messy, something is hard, it's not only for you to hard, it's for the entire world. It's entire students who are attempting the question. That's become the hard part. Are you getting the point what I'm saying? So the important thing is that if you feel something hard, make your own plan, whatever you feel that. Like this, okay, total finance required not available in Japanese one, but ART. So we have to find out with the Japanese. Then the amount we will arrange from the hedging. Sale of subsidy, hedge by future. But do remember, whatever the amount you have worked out, that is based on after 6 months. But here we required the amount after 1 year. This amount after 1 year. This amount after 6 months. So examiner mentioned here with the question context, whatever the amount we will receive through the hedge for the sales of subsidy, we will deposit the amount accordingly. Means this amount 10,062 will deposit for 6 months and then work out accordingly. So we need to work out for this. Whatever the balancing figure, that is what the requirement about. The additional finance required to fund aero project for the additional debt finance. First of all, approach what you should do. Are you getting the point? Hello, are you with me? It's not possible if you attempted wrong thing with that part. It's not possible to fail. If you're stuck somewhere, keep moving. That is called 100% appropriate exam. Examiner not expecting that you must be attempt 100% accurate. 100% appropriate exam. That is the key thing. Now work out. Whatever the working here actually about after 1 year. The finance required after 1 year. That's a key point. So number one, do it this, do that point. Here examiner mentioned that the here examiner particularly mentioned that annualized yield on short dated T-bills 1.2%. And it's also mentioned here the BOD is concerned about the negative fluctuation between now 6 months and 80 months received. Asked to washing company treasury department hedge expected this one. And this is what about annualized short dated T-bills. So what we should do, a very basic point, compound amount after 1 year. How to calculate? How to calculate? 10,062 multiplied by 1.12 power 0.5. That is 10,600 and sorry, 1.12 power 0.5. Or you can apply 1.06 directly. 10,665.72. And we can apply like this as well. Oh, I'm sorry. 1.012. So here, I'm sorry. 1.2% per year. So 1.2 divided by 2 0.6% per is equal to 1.2 divided by 2. Yes, 0.6 per 6 months. Yes, per 6 months. So we have to apply is equal to 10,062 multiplied by 1.006. That's a value. That is 10,122.372. Can you please reply me? Are you with me? That's simple 6 months. Okay. So is equal to multiply by 1.06. But the point is that ARD 10,150. We need to convert with the JPY. We need to convert with the JPY. Now for this matter, there is a concept called cross rates. Sir, what does that mean? Why we are discussing this point? Actually, the issue is that in this question, we have to convert ARD into Japanese yen. ARD into Japanese yen. But there is no exchange rate. There is no exchange rate. There is no exchange rate with respect to with relationship of JPY over euro directly. But there is a rate about what? There is a rate about Japanese yen over euro and ARD over euro. So listen carefully. JPY over euro is given. And on the other hand, ARD over euro is given. Now what we should do to make a relationship, to develop a relationship of ARD and Japanese yen. What to do? We have JPY over euro and ARD over euro. So what should be the mathematics? What should be the mathematics? There are two mathematics, two possibilities. Either JPY over ARD or ARD over JPY. Here the code call direct code because foreign currency denominated, direct code. Here the code indirect code. Everyone is with me? Can you please apply me? Here the point about the cross rate. Yes. It's our wish either to work out with the direct quote or indirect quote. It's totally our wish. Another important point. Another very important point. And that is the rule of the market. What I am going to tell you, that is the rule of the market. I'm not telling you the detailed logic because it's a revision. It's a questioner class. And no, you don't need to work out accordingly. Now, let's suppose we have to work out. We have determined that, yes, we will work out with the Japanese yen, JPY, because the question it's about the direct quote, this one. But the point is that there are two rates, one buying, one selling. One buying, one selling. So the point is that we have to start working here. Listen carefully. For example, this 129.2, this 129.2, this 129.2, the relationship of JPY per euro with ARD per euro. So what to do? 129 or 132.4 divided by this. Yes or no? JPY divided by ARD. But here the point is that 129, listen carefully, 129.2 divided by 95.6 and 132.4 divided by 92.7. Sir, why you make relationship 129.2 with 95.6? It's a market rule. Buying cross rate always work out. Buying with selling, selling with buying. I'm not telling you right now any logic. It's not about to develop any logic matter. Leave it for the time being. Can you please reply me? All of you are with me. Divided by 96.5 is equal to 132.5 divided by 92.7. Sorry, 95.6. $1.35, $1.43. That is the first thing. Now this cross rate actually required for the finance. Now candidates, very important. These two rates here. The cross rate working. These two rates here. Now listen carefully. The very important point. We are not here to discuss anything hedging. Do you accept that this is a direct code? Yes, do reply me. Is this a direct code? Yes or no? And direct code with viewpoint of bank. This one is buying, lower is buying, higher one is selling. Do reply me. What is the relevant rate here? We are not hedging here. We are just spot. We are at the spot. We required 10,150. 10,150 ARD. 10,150 ARD. We need to buy, bank will sell. Direct code, higher one is selling. We need to buy ARD. Bank will sell. Direct code, higher one is selling. That's why we will take the 1.43. Whatever 1.42843. Everyone is clear? We are not here hedging. We are actually about, we need to invest at the foreign currency in the buy 10,150. So it's equal to 10,150 divided by this value. 10,150 divided by 1.43. But the issue is here. Sorry. 10,150 multiplied by 1.43. But the issue is there. Listen carefully. Listen carefully. This is the spot rate. Please be with me. This is spot rate. This is what the spot rate. Candidates, please, whatever we calculate right now is equal to spot rate. But the very important thing is that we require the finance after 1 year. After 1 year. So when we require to purchase this ARD 10,150, can you please delete this annotation? Bismarck, can you please delete this annotation? That's it from your side. Thank you. Okay. So is this ARD we need to require to purchase now or in future? Is this now or in future? Do we need to buy now or we need to buy after 1 year? No, not after 6 months. It's after 1 year. Once again, the important point is that year 1 project will start after 1 year. So we required this ARD 150 after 1 year. Sale of subsidy after 6 months, but we have done it after 1 year. Our standing is now. Yes, I know. Our standing is now. But we required finance after 1 year. Are you with me? We required finance after 1 year. Hello, can you? Can you please reply me? Are you people getting the voice or getting my point, what I'm saying? Do reply me if I'm asking something. Don't lost anywhere. So once again, examiner here asked us that how much we are going to start a project after 1 year. Year one, the currency ARD, and it required finance after 1 year. ARD 10,150. 10,150 required after 1 year. But after 6 months, we will be able to sell the subsidy and hedge our amount, and we will receive 10,062. Whatever the amount 10,062 we will receive, we will deposit, and after 1 year, it's become 10,122.37. So although this amount mentioned here 6 months, but actually we have worked out with 12 months. Yes or no? But same case here, this amount also required after 12 months. But my question is that whatever the cross rate we have calculated, is this a spot or 1 year after? Now do reply me. Is this a spot or 1 year after? Spot. And the relevant rate is this selling. This is the relevant rate. Estimated spot after 1 year by purchasing power parity theory. Now calculate. How to calculate? Is equal to 1.43 JPY 1.43 per euro. Now multiply by what? 1 plus inflation of what? Japan divided by 1 plus inflation of euro. Now calculate the amount. Calculate the amount. Do reply me about the inflation rates. Japanese inflation 1.5, Air 1 inflation 9%. Is equal to 1.43 multiplied by 1.0 divided by 1.09. That is 1.33. That is 1.33. Now work out accordingly. Is equal to 10,150 ARD required multiply by rate 1.33. 13,515. 13,515. So total finance required 13,515.8. By hedging and by depositing the amount with that hedge amount, we will be able to arrange this amount. So the remaining figure minus is equal to this one is the figure. That is the first requirement here. 3393.42. 3393.42. That is the point. Almost 3,500, 3,500 million Japanese yen required for this. And that is what about the first requirement. That's the point. Now the next requirement is about NPV. Estimate the NPV of the Japanese yen. That is the foreign currency investment appraisal. That's a point. Furthermore, before starting that second part, you have to identify that whatever the hedge amount we have to invest and invest for further 6 months, the amount calculated by 6 months apportionment of the deposited, 1 mark. Estimate cross rates, 1 mark. 1 year time cross rate, the forward estimated spot, 1 mark. Debt borrowing required, 1 mark. What examiner says about this? Now come on, report. The main difficulty that many candidates encountered was calculate the cross rate. This is the difficulty. That means that is the deliberate hard part. This point. Common mistake in the answer include not showing working for exchange rates produced. Therefore, no OFR. Even something hard, you have to put effort and show working. Examiner will consider own figure rule marks. Could be avoided. If not produce any working, no OFR would be avoided if exchange rates wrong. Not labeling the currencies difficult, making it difficult for markers to identify the exchange rate referred to calculation. Cross rate incorrectly calculated and purchasing power wrongly applied in forecast exchange rates. But I can bet on it. It's not possible that you will disqualify your exam due to that part. So this is for the first part that we have done.